Hello everyone, welcome to the Do More With Your Money podcast, and the title today is The Value of Financial Advice, and I'm joined by some valuable people today, all qualified, two financial advisors, one that trains financial advisors, so welcome everyone. I know Tom, you've been on here a number of times, people should recognise your face. Jen, 3-4 times?
This is my third.
Yes, and Lewis, this is your...
First time.
This is your first time.
Debut.
Brilliant. Well, Lewis, I think you should introduce yourself. Tell us what you do and how long you've been at True Potential for.
Yeah, so I'm Lewis. I'm one of the advisors here at the head office. I started back in 2018 now, so it's been about just over 6 years. Advising for about 5 years, I think it has been. It was quite came in, did my qualifications, and basically after that moved into an advice role.
Yeah, I remember your first interview, Lewis, because I think it was Neil and I that interviewed you for TP. Is that right?
Yeah. I came in my presentation. It can't have been that bad, I guess.
Yeah, and you're still here, so welcome. You give us some good insights. I think today, folks, we've got a pretty good session on the value of financial advice, and I kind of want to pick a couple of things because there's lots of things you do in your day-to-day jobs where we can see we're adding significant value to clients, and we'll kind of try and want to pick some of this. So let's start with you, Tom. Okay, so we're laughing because what is financial advice? Actually, why? I think let's just turn that question around a little bit, because let's define what it is and why you believe it's important when speaking to clients.
Yeah, I mean, I think there's a number of different answers that you could give for this, but I always think our main job is to make sure that clients have enough in retirement. Now, there's various different ways of doing that through, tax efficient investment advice, making sure they're in the right portfolio, behavioural coaching to some degree, doing cash flow modelling and retirement planning. So there's so many different facets to it. But I always just say, look, making sure that overall you've got enough in retirement and the client is comfortable. I think that's the main thing that we do as advisors.
Yeah, and I think there's two elements of that, and we kind of say this quite often on these podcasts, but you've got the growth to that retirement. So what do you need? How are you going to get there? And there might be different journeys and different parts that you need financial advice during that journey. And then there's, when I want to retire, how do I best facilitate an income to carry on living the life that you want to live and making sure that you don't run out?
Yeah.
So there's different parts, isn't there, way you can do that. And I think what I would say as well, I think we should just go into this a little bit, because different clients will need different types of advice. Our clients, there'll be some that are savings, there'll be some that are, in retirement, there'll be some that have got, sort of larger pots of money that need inheritance planning as well. I think, Lewis, we'll dig into that a little bit, actually. So if I'm a client where, I have a property and I think I'm approaching the sort of inheritance tax position, what would your advice would be? Get some advice, I would sure, but is it definitely worth having a conversation in terms of plans for that? Yeah,
no, absolutely. And I think when it comes to advice is, it shouldn't, the starting point shouldn't be the end point. So you shouldn't be trying to say, this is the solution, this is the solution. With any bit of advice, you need to start with the client first. What's their position, what their goal is. So in that case, the property, might have an inheritance tax issue, is really understanding that and what their plans for. And that's where the solutions and advice can follow through, because it's not a one-size-fits-all approach when it comes to advice.
Yeah, it isn't. And I think some people will look at that and go, do I have because for me personally, I want to ensure that, even as a young man, I want to ensure that as much as my estate goes to my family. And there's questions around, well, do you have that inheritance tax issue, first of all? Do you, it's not necessarily an issue, but do you hit that band? And one of the things people forget about is your property. You always kind of look at all your assets and forget about the one thing that you're living in, and that can normally tip you over.
They also forget about the protection that they get out with the property as well. So a lot of people just think you've got your 325, £325,000 worth of nil-bit ban protection, but obviously if you're a couple, you've both got that £325,000 nil-bit ban protection, and then you've also got your residence nil-bit ban protection as well, which is up to £175,000 each. So you could potentially have protection up to £1 million. And there's a lot of people who come and ask us, have I got an inheritance tax liability? And actually, when we do the calculation, they don't. But there's also people who don't think they've got an inheritance tax liability when they do. So.
And do. It's funny, isn't it? Because when you write when we go through our reports, so if you're giving advice to anyone, one of the key features you have to assess is your inheritance tax. Is do they have is there a potential issue, and is there ways of mitigating against that, and etc. So it's always something a financial advisor should be looking at for you to help you and support you. And kind of going on the biggest point there, but it's a really great thing to look at. Just looking at the benefits of advice, if you kind of look at, if you kind of go back to a lot of our clients, they typically would have spoke to an advisor many years ago, and that advisor would have persuaded them to put £100, £200 a month into a pension. And they now have pots, sizable pots that they come in retirement because of that point of the advisor persuading them, explain them to put that in their pension. And I think this is a really important part that we should kind of discuss, which is actually statistics do show that if you have a financial advisor, you're more likely to save. And our job is to give advice, but our job is also around explaining to people why they should be saving as well. Yeah. And that's a really important part of it.
Yeah. I mean, there's various studies on this, have the benefits of a financial advice. And I made a note of one here, which is from the International Longevity Centre, where they found that having an advisor over a 10-year period actually made the client around about £47,000 better off. So that's just one study. There's various other studies as well. But I think for me, the main thing that a financial advisor can do is to provide peace of mind. And that's the biggest thing, really. Having someone there who you know and can trust, and can help guide you through everything that life throws at you, including all the different economic cycles that we go through, and making sure that they're coached in the right way, that they don't cash out at bad times when markets are low. That's invaluable, really, for clients. And I think that's where a lot of the added value comes from, is actually that behavioural side of things, and understanding human behaviour and trying to make sure that clients do the right things at the right times. That's invaluable.
Yeah, it's a funny one, because we all have had a number of conversations with clients over the last 2 years specifically, where we've seen a bit of volatility, and just trying to educate and have that discussion around, this is a long-term investment. This is a minimum 5 years. That's a really important part of an advisor's role, is to ensure that the client understands the journey that they're going on and why they're going on that. Because over the long term, in terms of, history will show this, equity-backed investments will outperform cash. That's just a fact on that basis. So it's really important to sort of really help clients understand that journey, and that we would never be recommending anyone to invest for sort of 3 years or less. Yeah. It's really important from our perspective.
Yeah, no, I think it's it's like you mentioned there about markets and staying invested. Is that probably is one of the most common mistakes, is trying to time markets and moving in and out of them at the right time. We don't know the future for certain, but we can look at the past, and we know most people haven't been better off because of that. So that's a huge part of our role, apart from just picking, say, the right funds or the right products, is being that reassuring figure to say, being that balanced view, try to stay in there, focused on your long-term goals, and that's how you'll be better off in the long run.
And it's doing it at the right times. It's not just doing it at when markets are low. It's actually educating clients when markets are doing quite well, like they are at the moment. It's saying, look, this year, if you look at the performance of our funds this year, have been really good. There will be years where they're not as good as this, and it's about understanding that you get some good years, you get some bad years, but overall, as long as we're on target for the portfolio, so that's the key thing, and it's going through the highs and the lows together, and just helping guide them through that.
And there's always an element of risk. It's just understanding and as an advisor explaining those types of risks. I think that's a key thing. Jen, I'll bring you into this because you have a lot of time training our relationship management team. You listen to a lot of the advisors' calls and look in terms of ensuring we're delivering high levels of service. What's your view on in terms of what clients really value when they speak to an advisor?
Yeah, I think I've been doing a few calls myself with clients as well recently, getting through from the back of reviews and completing reviews with clients. And I think what I've found with quite a few people is, just to touch on what Tom said there, the past couple of years have been quite difficult, and I've spoke to clients during that period, but what I'm finding from these reviews we're doing now is that people that have stayed invested and they have just stuck with the portfolios, they're now much happier that they've done that and they've followed the advice that they were given back then, and they've seen the growth over the past year, and it's something that the reassurance at the time is what they needed, and I think it was nice to offer that conversation, even if it was only a 20-minute call with an advisor or something, just to go over everything and look at the portfolio and how it's doing. So I think they've been valuable conversations that we've had in the past when markets were low, but I think checking back in now when the markets are doing a bit better has been nice to show the clients what the long-term benefits are. And then I think we've seen quite a few actions from the back of the reviews, just from a number of different things. There's so many things that can come into it, but I think a lot of people, they go from speaking to an advisor every year, and when they're coming to us and they're starting to do their reviews with us, they still want that consistency, just a bit of a general check-in, a look over how all their portfolios are doing, not necessarily just the ones that are held on our platform as well, but an overview of their whole circumstance and what does that mean for their retirement.
Yeah, I agree. And I think it's a funny one, isn't it? Because if you watch kind of the news on a regular basis, this what happens as you get old, Tom. You eventually will. This will come to you, but actually, you have to. There's a lot of sort of negative press that kicks around, as well as some positive press, but there's negative press, and then you obviously have access to information, which over the last sort of 5 to 10 years has been significant in terms of understanding kind of what's on the web, etc. But even ourselves alone, in terms of having your app, etc. If you're ever concerned, or if you ever think, well, why has that went down? Because the news is saying it's all positive, etc. Just give the team a call, give your advisor a call, and they'll talk you through, because there's normally rationale behind it. And we tend to give our advisors sort of weekly and monthly commentary from our fund management team to kind of explain what our thinking is. And sometimes there's a lot of occasions where there's decisions made specifically on long-term strategic decisions that we can share. And I think that's quite an important thing where the advisors can help.
Yeah, I mean, I think you made a very good point there about the press. And especially now with the mentality of the press where it's very much clickbait media, they're trying to grab your attention, so they're using big headlines and scary headlines as well. And I think that even you need more advice because of that, especially even if you look at the moment with the budget that's going on, and there's all these scary things about what could potentially be coming up in the budget. And we know, obviously, with budgets in the past, that the press don't always get it right when it comes to predicting these sort of things. And clients can make decisions based on what the press have put out there, which is actually detrimental to them long term.
Yeah, it's interesting, Tom. And I don't want to get political, because obviously this budget's coming up now, and we're getting asked a number of questions around tax-free cash, around capital gains tax, and it's really tough from our perspective. We have to give advice based on today's current circumstances, and it's tough conversations with clients. And what I would say is that you really can't make any decision you make and based on something that may be in the press, that may be happen. You're making a judgment on information that's not fully accurate yet. And it's really tough. I get that, because it might happen, it may not happen. But from our perspective, we have to work on today's rules. And I'm sure you are having questions on that quite often.
Yeah, absolutely. I mean, where do the hypotheticals end? That's the the problem with these rumours, is that when you speak about things like tax-free cash, whatever it may be, you have no idea where that might be. And that is the real difficulty. So you have to go off what's in place now. We would be hung up to dry if we made decision recommendations, based off rumours, and then they didn't come to fruition. So you've just got to be careful. You can't plan for absolutely every hypothetical. You've just got to go what's in play now. Especially
tax-free cash, that's the main one. I mean, taking out money from your tax-free cash now, hypothetically thinking that they're going to scrap that altogether, you can't put tax-free cash back into that pension, and it's so difficult to do. So you've got to be sensible. And obviously nobody knows what we're going to see in the budget yet. But we're getting a lot of questions around it. I mean, we've just got to wait until the budget comes out and then make sensible decisions from there.
Yeah, I think so. You can only base on where you are now. I think that's quite important. And I think, just speaking on facts, when we've seen changes to pensions from budgets previously, you tend to see these protections being put in place. Exactly. So you kind of the people that have been invested over these periods of times have been protected. There's no guarantee of that, but that's tend to be what we've seen from it. So who knows? I think this is the thing. We've just got to be based on what we know at this moment in time, don't we? So it's been a funny. It's been an interesting time in terms of having conversations with clients on these things.
It certainly has been.
But I think hopefully we can. I think that's point of having your financial advisor, getting that level grounded thing. Let's talk about tax, actually, because there's a benefit of taking financial advice in terms of helping clients with tax, in terms of understanding the best tax efficient product stuff. That surely is a good benefit, Tom, for an advisor.
Yes, certainly is. I mean, obviously from a tax point of view, it really starts with making sure we get the right product choice. So, say if a client came into us and they wanted to invest some money, we've got to make sure that they're using all the right allowances for ISAs and pensions, and look at other suitable products after that if they've got more money to invest. And then I suppose once you put them into the right products, it's about using those allowances every year. So for instance, we might do a general investor account to ISA transfer every year to maximise the capital gains allowances and also the ISA allowance that they have every year. And also maximising pension allowances every year as well, which is what our job's there to do, is to make sure that we're putting them in the right products, but also then every year we're moving that money across into the right products if they've got products in general investor accounts or maybe bonds as well. And then obviously from a tax efficiency point of view, when it comes to the drawdown element, that's when we really sort of come into our own again with our drawdown advice that we give. In terms of utilising personal allowances with pension income, and then using tax-free cash or ISA income for the rest if they've got that. So that's something that me and service do all the time.
Absolutely, yeah. You want to be maximising your pension ISA allowances. They are fairly generous. You can, and I think a big thing, especially if you're a couple, is not to maybe just think about yourself. Is your partner can have them. I think that's a very common one. Is that some people have savings in their name when really they should be trying to utilise as much as for both of you. If if that's for your joint retirement, that can come into play with things like capital gains, annual exemptions as well. So joint products can sometimes be a great idea to try and mitigate tax. So yeah, remembering those, and obviously the drawdown side of it. Yeah, it's about trying to put the right income strategies together and mix what you've got to to be as tax efficient as possible. And I think that will become more and more important with what's happened with the capital gains tax and the exemptions. That it used to be 12,300 a couple of tax years ago. Now it's all the way down to 3,000. That's a big drop. It's going to impact a lot more people, and making sure you may be trying to switch it across into your ISA or pensions. You need to be more on the ball with that going forward.
Yeah, I think you could take £20,000 out of your GIA, your general investment account, and probably be quite comfortable that unless you had some sales of anything that's capital gains tax over there, that you probably weren't going to go over it, where now it needs to be checked.
It was quite rare, to be honest, in the past, wasn't it? But a few years ago when we were doing them, it was very rare that you'd actually go above your capital gains exemption, and of course you wouldn't have to fill out a self-assessment as a result of that, but it's all changed now.
Yeah, it is. It's where you've got to be really, really sort of cautious on it, and I think that's quite important. Well, let's just unpick. So you mentioned a couple of things there. So times that you'd need advice. So there's two examples that we give there, which is moving money from potentially non-tax wrap products into tax wrap products. It's a time where you could consider it. We mentioned retirement as an option. When other life events would we, recommend clients to come and speak to their advisor?
Yeah, I mean, one that you mentioned there was marriage, I suppose. One thing that I always say with marriage is not just look at advice in terms of investments, but look at your wills as well, because with marriage it revokes your will, so you're going to have to look at your will again at that point. Obviously, you've got new allowances, with marriage when you get married, so use them if you can.
So you've just got married soon, so have you checked out your will? I'm just wondering whether you...
No, I'm in the process of actually getting that sorted at the moment. Okay, fine. Funnily enough, because I've held it off. I think we redid a podcast on wills, and I was holding off obviously until I got married. But I'm just in the process of sorting that out now, which is not fun. Yeah,
it's not fun, but it's highly recommended. Anything else, Lewis, that you sort of think?
Starting a family can be one. I mean, we haven't maybe touched on it too much, but having the right protection in place is also really important, and is a big need when you start a family. And it can be, when it comes to retirement, there might be other costs that you've got to factor in. It might be, kids' weddings, it might be kids, first house deposit if you want to help them out in that way. So there are lots of different things going. Could even be things like divorce, where obviously that is, a big change in your financial circumstances. So all those things are big events. What an advisor can do is, if you're looking forward and you're planning, is that it can give you control leading up to those events, so they're not just always happening to you. You've planned for them, you've helped to try and mitigate risk, but also maybe seize opportunities like when you first become married.
Yeah.
Another one I would add, which is a bit of a different one, is really business owners when they're starting to actually make some money within their business accounts, because that's something where I think an advisor really comes into play in terms of making employer contributions, also thinking about where they want to take the business, and an end value of that business and what that sale value of that business might be, and that might be in 10-15 years time, but that's actually really comes into good financial planning, really, where we can do cash flow modelling and stuff like that for them to really help them out with that sort of stuff.
You can really help business owners. I've helped some personally in the past recently, just basic things of employer contributions into a pension, is something to consider. And normally what happens, from my experience, is you get a phone call a week before their year end. It's my accountant's told us I should put some money in my pension. But if you plan for that, it can be a lot easier for us as well. If you are a business owner, it can be, there's some good advantages to doing that. But there's other areas you can consider.
I've fallen into that trap a few times with business owners now, and make sure that the business owners that I've got as clients, I know when their sort of accounting period comes to an end, so I can remind them of that.
I'm just about to do my tax return, or I'm just about to put my year end, and I need to put this in my pension. How do I do that? And luckily we've got things like Impulsive and things like this.
Exactly.
But plan for that. Jen, I'll come to you on this because we've got some good technology, but the role of technology in financial advice, what does True Potential do in terms of like technology wise, and how can that assist people in terms of financial advice?
Yeah, we've got quite a few things that can kind of play into that one. So I think our appointments are now done via the client site. So we've got, people are logging into their accounts to do that, which not only gets them online, they can have a look through their whole portfolio value, all of their different policies before they do have that appointment, so they know they're a bit more clued up on what it is that they're talking about when they do get into that appointment. And then following the appointment, I think what we often find is, some things will go through your own advice, it'll go through the full advice process. Some clients choose to go on a non-advised basis as well, and there's plenty of things on the site that they can take a little bit more control with it, so they might have a discussion with an advisor that they do want to start paying more into a pension policy or something like that. They might not be able to make that decision there and then, or it might be the case that they're waiting for X, Y and Z to happen first, but they've got the control then on the site to go ahead and set up their own direct debit payments in. They can make impulsive payments, so one-off payments into their account. And if they're using the advisors that they've got, they're utilising the appointments that they've got available to them, then it means that they've got the knowledge behind them to be able to go and use those features on the site with a little bit more of an understanding behind them, I think, as well, which is quite good. I think people are probably it can be quite daunting feeling like you are going and starting to set up a payment into a policy, whether it's regular or we do see larger one-off ones as well. But I think they're there to be used, but I think using the advice appointments, whether it is just for a bit of general information or whether it's to go down the full advice route, there's plenty on there where clients can take a little bit more control once they know what it is that they're wanting to do with those sort of things as well.
Folks, let's talk about technology and financial advice, and we call it sort of hybrid advice. So how can you use technology to assist with your with delivering advice to clients? So you mentioned some tools there, Tom, like cash flow and things, but Jen, I'm going to send this over to you because you being the technology expert and training the team on this. What sort of technology tools do we have in place there?
Yeah, so we've got the majority of our financial advice calls at the moment are done via the client site. So we do those as a video call where the client is speaking one-on-one with their financial advisor, but they do that via the True Potential site. What that'll do from there, it brings in some notes through AI, so that'll write up the scripts from your appointments themselves. But another interesting thing as well is if they don't choose to go down the advice route, I think there's other things in there that they can use as well. So we have a lot of clients that are looking to set up things like direct debits or make payments in, but it might be that it's just not the exact time where they're wanting to do it. They might need to wait for certain things to happen before they can do that. So it's nice for them to be able to speak to an expert on the subject, go away, get the knowledge that they need on that, and then from there they can go away, and when the time's right for them they can then set up a direct debit, amend the direct debit, or make things like one-off payments into their policies as well.
It's really interesting because we're talking about the video calling, and COVID's probably brought this forward, hasn't it? The integration of technology and having an advice appointment rather than, some clients still have face-to-face appointments, but the ability to have it. And I guess this, Tom, you two do this more than we do it, but I always find with advice, one of the key things of, working with clients is building a trust and rapport. So how do you do that online? Is something, is it just the same from your perspective? Obviously, we're face-to-face here, building a bit of a rapport in terms of building rapport with clients. Video, is it? Yeah. How does that work?
It's exactly the same. I mean, from our side of things, we were actually quite surprised, weren't we, like how you can build trust over time, especially with the video side of things, where you can actually see a physical face. Yeah. When we first started, obviously we were doing a lot of stuff over the phone a lot of the time, and it was a little bit more difficult. But now when you've seen clients, over video call, and obviously we see them face to face as well. But we have got clients all over the country.
Yeah.
And just seeing, having that conversation, and actually the conversations that we have are a lot longer, aren't they, when we're on video call, which is good, which is what we want, because we get more information out out with them, which helps when we're sort of building our fact finds and trying to gather as much information from the client as possible to, you know, create a suitable recommendation. So, I much prefer video calls over phone calls. It's much easier to get the stuff that you need to get.
I think so. Yeah, I think even before COVID, I'm not sure we did have any video calls actually. I think it was purely phone calls, and I think it changed for everyone. You know, at that point. But I think what's great about them is, you know, people do have busy lives and things like that. Sometimes you can't always come into an office. You know, if you want advice from a certain advisor, you know, they might not live around the corner from you, you know, things like that. You know, the world has changed in that sense. So, you know, it does open that door basically to, you know, through video calls.
I had a meeting with a product provider before, actually. We were just having a discussion, and I've never met the chap before. And I always insist those meetings are now done on Teams. So it was very much like, I could see it. He was in his office, I was sitting out in my office, and we had about 45 minutes on the phone. And we probably spent about 10 minutes talking about what we needed to talk about, and about 40 minutes getting to know each other about what we're doing in life. And he's just done a Tough Mudder, and I've just done the Great North Run, etc. And you can certainly build that rapport. It's really powerful, that digital. And I think that has advanced the facility for us to speak to more clients. Yeah. And that's the key. I would talk about value, and actually the value that delivered is through your time. And if you can spend more time talking to clients, I think that's a great thing for advisors.
I think what's interesting with the video call aspect is there's obviously some clients that don't want it, and that's absolutely fine. We can still see them.
Yeah.
But there's a lot of people who are so busy in their lives, it's all often working people, where they actually prefer a video call because they can just get that done, and then they can move straight onto their own work. Yeah. You know, and I mean it's just another tool that we've got since COVID, which is just a good thing to use.
Yeah. Who makes the coffee and tea though? Do you have to make your own? Good, fair enough. I think while we're on the technology, folks, we'll talk around because we've got 2 awards that we won yesterday. I think it was the day before, just the last couple of days. And these are industry awards. They're the Schroeder Awards, Schroeder Platform Awards, and we won Best Platform under 40 billion, which is a huge sum. But it's amazing nonetheless. And I think Best Service Provider as well, which is, you know, I really, really appreciate winning industry awards. I think it gives you this industry, you know, the backing from your colleagues in the industry. That's a really great thing. But what I love about the Best Service Award, it was actually voted by advisors. So our advisors that use our technology and use our services, did you 2 vote?
Yes.
Just checking. You know, as advisors, you looked at us like I shocked you there, Tom. Do I need to check this out afterwards? No. But you know, your award came. I think it's amazing. You know, really proud of the team in True Potential Investments. These are not easy things to win. They're really not. You have to go through a full application. There's a panel that you get interviewed by. And there's some excellent firms in our industry, some really great platforms in our industry. So to win that, we're really proud of those 2 awards. So well done to the full business, and specifically the team in True Potential Investments. Well deserved. I'm going to summarise here because we've got some key points that I think we've talked about. But I think a financial advice can help with your inheritance, tax planning, drawdown retirement, investments, savings, beneficiaries, ensuring that your estates are passed on to your beneficiaries and they understand it, and then guide you to someone to do a will, etc. So there's a number of points that can help, and there's things missing here for me, which is things like protection that you mentioned quite rightly before, and potentially mortgages as well for certain type of advice. There's a number of areas that advice piece can be valuable for. But I'm going to come to you each now, and give me one thing that you think would really benefit our clients in terms of what would be the one thing that an advisor can deliver.
Yeah, I honestly think, although there's so many different things that probably clients think is the most important thing, which is all of those things that you probably stated there, I do think the behavioural aspect is probably the most important thing that actually saves clients money over the long-term period. And what I mean by that is educating clients, making them understand what economic cycles are like, not cashing out at the wrong times, not trying to buy into the market, trying to time the market. I really think that's where the benefits of an advisor comes into play. Is from that, and obviously mentioned saving little and often as well. You know, that sort of pound cost averaging sort of aspect is often overlooked, but I do think it's, you know, our job a lot of the time is actually just making sure that the clients are making the right decisions from a behavioural point of view.
Yeah, agreed, Tom. Jen?
Yeah, but me, I think I'd say utilising having an expert there. I think For anything else, you would do the same thing. If you needed to get your car fixed, you would go to a mechanic. And I think if you've got any questions about finances, I think it just makes sense to go and speak to a financial advisor. I think there's so many things that we find speaking to clients about some of their non-advised queries and their general questions on the relationship management team. We find that there's so many little things that we bring up on the phone and clients didn't know that they existed. So I think some of the topics that we've mentioned there, like bereavement and stuff in particular, is one that's come to mind there. There's so many, things that we can talk about there with clients where if they hadn't went and spoke to that expert, they might have made the wrong decision as a result. And there's so many benefits that they can get from speaking to somebody that deals with queries like that all the time, where they'll learn something that they might not have known before. And there's a lot of benefits from doing that from like a tax perspective and things like that.
I think for myself is probably looking at, what is enough for that client, or, have I got enough? Those sort of questions where, might not always be for retirement. Obviously that, is a massive aspect. You might have, slightly different goals, but working with an advisor to understand what them, goals are, and then putting the things in place to help them achieve them, be it, topping up your ISA, your pensions, and just basically giving clients that peace of mind. And that part of it, I think a lot of advisors would say that's maybe where you offer, you can offer the most value, but it's obviously probably one that's very hard to quantify. It's more subjective in how that kind of client feels, maybe, doing a little bit to the behavioural side. But yeah, just trying to really get to the bottom of, have I got enough? Will I have enough? How do I get there? What I want to achieve.
Yeah, I think I like the behavioural side. I think that is important. Yeah. But it's a journey. I think there'll be different strands of different goals that you go through in your life. And I've been through a few so far, and I've still got lots to go through. But I just find it really interesting where you set these journeys off and we discuss where's the best place if you are going to save for school fees, if you are going to save for retirement, if you need some protection to cover a liability. Like, these are all individual goals. Just by having conversations and ensuring you're in the right position can make a huge difference to your life. And I've had many conversations with clients at the later end where they're starting to retire and they're taking their income and they're ever so grateful for that advisor that went to see them 30 years ago and told them to put £300-400 a month into a pension, because they now can retire, live the life that they wish to live on moving forward. And I think that is so important. So that saving element and that persuasion is just as important as the element of me going, you should take it in this way and that way. So yeah, I think that would be the way I would summarise it.
The other thing as well is a lot of people don't get that right from the start. If you get that right from the start, you can then relax.
Yeah, you can. You can. I think but it's never too late to start saving.
Of course it isn't.
It's never too late to start saving. Brilliant. Well, thank you very much, folks. I thought that was a really interesting session. I should have said that everyone in this room is qualified as well. I should have said that right at the very start. Some practice and some not. But it's, really, really interesting session. So thank you very much. If you do listen to the podcast, please do the usual things like subscribe to usual podcast wherever you get them, and we'll see you very, very shortly. Thanks, folks. Thank you very much.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.